guys, this is Julie. Good morning. Going to take a look at crude to see where we are. We're moving outside of ranges, breaking ranges. So let's take a look and get a feel for where we are on the higher time frames. This distribution is a quarterly, and you can see that we are maintaining the PT1 of the 3-month quarterly, which is bullish. It did not return inside the value distribution. And so we bounced off the quarterly one again, made this turnaround again, retest. So it looks like it's trying to break this flag and possibly move back up into the higher tails. So let's put the PT2 on the chart so we can see what we're looking at. And so you can see that the down move off the upper tail coming back into the one, that reversion to the mean, um, perfectly coincided with just sort of like a flat, up, 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 and then it hit the one. It's like hitting a wall, flattened out, and then we've sloped down, showing that upward bias. There's no down slope to continue the shorts. So let's add some additional information on the chart with other higher time frames. So we want to put a monthly without the quarterly on the chart, so I can just add another distribution, change it to month, and I actually have a template loaded for this. I'm going to load the template. The lines are a little bit thicker. Okay, so now I have a quarterly and a monthly, and the picture is starting to come in a little bit clearer. And I can see that I have broken above the monthly one, which is very bullish, heading to the monthly 2 and 3. So I want to add the weekly to this so I can get a better idea of targets for intraday trading. So I'll put a weekly distribution on it. And now I can see that I broke my range. I got to the target Friday, but or Thursday, excuse me, and it went through, broke through. So this is very, very bullish going forward. Market's trying, like I said, to get up and already has broken through this trend line. If we put a trend line, this is probably what a lot of people are looking at. You can see the trend line break. And there is the low volatility, which is supportive of a continuation, trend continuation move. So we can look for next week for the weekly target to get hit at some point. 109.31, 110.27 is a tail right above it. And I definitely want to drop this down to a lower time frame to, trade that intraday with these higher time frame targets in mind to try to reach. Again, they're just targets. So this is a 60-minute chart with a daily distribution. And you can see that it is very much mimics the standard deviation bell curve. Price will trade inside the first standard deviation 68% of the time. When it breaks the 68%, when it breaks the 1, you want to try to get to the 2 and or 3. That's it, 1, 2, 3, just like that. And so I use things to help me, like momentum and slope. So you can see that for this down move right here going to the 3. We had upward slope of the volatility, and we had the inverse falling momentum. And the falling momentum, this is a momentum indicator expressed on a Bollinger Band of momentum. So it's Bollinger momentum, and I'm below my midband and I'm below my outer band of my first standard deviation of the Bollinger. I do have a very tight setting. My customers get these indicators on there for a chart. So if you would like this template here that I've got, just send me a Skype and I'll send it to you. But you can use Bloodhound and Blackbird to capture these conditions for the rising slope and the falling momentum, and then help you determine these ranges and the timing to trade from the 1 to the 3, what that looks like, what your risk might be and how you might approach making a trade like this. That was pretty textbook right here. So that's $4.10. It's $10 a tick, so that's $4,100. And that occurred in about an afternoon from lunch to closing. So when we can learn where we are on these higher time frame distributions, like right now we are looking to go long because we are breaking above the ones on these higher time frames, the quarterly and the monthly and the weekly. We want to be taking long trades on the lower time frame. So whenever I can get momentum outside my Bollinger Band moving up are ideal times to approach this market because it's moving up. And yesterday, or Thursday, excuse me, I keep saying yesterday, it broke above the Bollinger Band, it broke above the mid-band, broke above the outside standard deviation. Let me see if I can show you this. So you can see the first standard deviation, and you can see that break and run. That is a great bias indicator to trade with momentum above my standard deviation of I've just put a Bollinger Band on my momentum is all I've done. But when I break that first standard deviation and momentum is running above that first standard deviation, this is exactly, where, we want to know that that condition is there and take advantage of it. If we are trading in the direction of the higher time frame, right? So we know on a higher time frame path what we want to go to. And I can put different distributions to help me do that. This is a 60-minute. You can use a 5-minute chart and put a 60-minute distribution range on it to help. Anytime you back up to the lower one in an uptrend is a great place to engage the market. Right here. All of this. Go forward. But to, even get a more granular approach, you can go to a 15-second chart. or a 15-minute. Here, let me look at the 15-minute first, and then we'll go to the 15-second. So the 15-minute, you get your uh, bounce off of support resistance. The best place to enter is a retest of prior support resistance. And so when I can get the confluence of the levels, it tested this support resistance here and attempted to make the breakout, but then you got the return back into the double band. So this was a double level. You had a weekly and a daily one combination, and that was the winner for the touch and go. Pull back, touch it, and then it took off, and you see the corresponding jump above the midband. So you could have a rule in place that you're only going to trade directionally in the direction of momentum relative to its Bollinger Midband. And I can show you the settings that I use, my magic settings. They're not normal, they're custom settings. But it's the same, principle. Outside your first standard deviation, that's what we're trying to find. So I set it up so I can see it easily. You don't have to look at the chart hard and not notice it, right? You can automatically see when the condition occurs. And also, you can set this up in Bloodhound to only signal trades when that condition is present. And that limits your ability to be on the wrong, it enhances your ability to be on the right track, right? You will have areas where it, reverses on you, but ideally you're going to be able to recognize the crossovers of the upper band back inside the value and that double cross, and especially if it moves to the bottom and starts taking off, that's not a time to be holding along at all. So you can get used to using Bollinger Momentum in your trading with the slope. Again, this is so important. If if there is downslope, you don't want to be selling, right? You really don't. See all that downslope? In any one of these bars on this support resistance, you would not sell. In fact, this right here, this down, down, down on the support resistance indicates that you should be hitting that each time going up, because it's not going to go short. Okay. Trade to the statistical levels that you can set up for tails. I've got a Globex distribution on this for intraday trading. These Globex 2s and 3s are hit all the time. Market came up past the normal targets, both the weekly and the daily, and went to the Globex target because I knew that first I knew the target was there, and I also knew that the full range was here also. So the market always expands to the fullest measurement it can, and then it pulled back a little bit. So that was a great trade session on Thursday for crude. So we need to learn to identify picking these areas where we can get into support resistance, learn which direction we're trading on that higher time frame chart, and then try to even use a 15-second chart to time our trades and go to these higher distributions. So I can nest a 60-minute distribution, a daily distribution on, and a Globex distribution on the 15-second chart, and try to incorporate areas of prior support resistance are the optimal location for entry, but that doesn't mean that you can't make another trade decision somewhere inside the area to add on or something like that and trade the slope. Just slope trading with momentum is fantastic. So try to have a trade plan. Try to use like a 15-minute chart as an anchor at the very least, and trade with your higher time frame 60-minute and daily chart. And when you can put those three together on the same day on the same trade plan, and support going in the right direction from jump, then you can start increasing the probability odds of having successful trades versus trades that roll over on you. So I hope that helped. Put as many distributions on your chart as you would like. Just make sure you have the right amount of data. And if you're using a 15-second chart, don't try to put a weekly or a monthly on here. It's just going to, kill your system. But use those on the higher time frames. Talk to you guys later. Let me know how everything's going, and y'all have a great weekend. Bye bye.